Tonight's Market Monitor guest says, buy the manager, not the fund. In fact, he trademarked that statement. Last time he was on with us, his picks were Apple. It's up 19% since then. UPS down 3% and Visa up 17%. Let's hope he does as well this week. He's Jim Lowell, Chief Investment Officer at Advisor Investments. Let's start with a quick thought on what you see for the markets over the next 6 months.
I think we're going to see a lot of near-term volatility, Greece or otherwise. We know that this is a market that's prone to whatever our Fed may or may not do and all the rumors that attend to it. So I think investors are going to have to get used to a lot more volatility, if not just market volatility, emotional volatility as well. But into that mix, gains typically are made, especially if you're a good long-term investor or invest in good long-term investors.
Are there certain mutual funds that you could invest in that will help to alleviate some of that volatility? What are some of your favorites right now?
So I'd say my hat trick of picks for hopefully a trinity of gains would be Fidelity Mega Cap Stock, Fidelity International Growth, and Fidelity Japan Smaller Companies. I don't only invest in Fidelity funds, but I like those three in particular. The managers behind each of them have stellar track records, not just in up markets, but also defending well against downdrafts. Losing less will enable each one of those managers, I think, to be able to climb out of a shallower hole versus an index fund or an ETF. In particular, I like the U.S. mega cap space because it is still relatively undervalued, especially compared to our mid and small cap areas here at home, in large measure due to the fact that their revenues derive from the international markets, which have been weaker than our own. And across the pond, Europe is just a perfect trouble spot. There's a tempest in almost every teapot there, but that's great news for a manager like Jed Weiss at International Growth, who's got a long-term track record of going in, turning over the stones, finding the rubies in the rubble. And then Japan Smaller Companies basically helps me sidestep the Nikkei 225, Japan's equivalent to our S&P 500, which sets successive 15-year highs almost every week. I think that's overvalued. But in the mid and small cap camp, they're not vulnerable to currency and exports. And if you know what you're doing, there are over 1,000 companies in the Japan marketplace with PEs under 13. There are less than 200 in our own Russell 2000.
Jim, I've known you and known your work for a long time. I just want to be absolutely clear with the viewers. You specialize, or at least these picks are Fidelity picks. You have a newsletter that is independent of Fidelity called what, Fidelity Advisor or something like that.
It's called Fidelity Investor. Yeah, it's called Fidelity Investor. And it's been out and about for over 15 years, top ranked by Mark Colberts. And it's also completely independent from Advisor Investments. But that is one of my expertises. I also have been writing about exchange-traded funds since 1996, a long time before anybody even thought they were the best mousetrap in town.
Yeah. All right, Jim, thank you very much. We appreciate it and appreciate your time this week. Have a great weekend.
Thank you, you too.